Welcome back to ASX Market Watch and charting trend signals around the world. This is where we look at the world economy from a chartist's point of view. A fantastic way to supplement your own way of trading or investing, whether you use fundamentals, broker reports or technicals or charts, whatever you do. Because we believe that 3 out of 4 stocks will follow the overall market, we look at the indices around the world. Seriously, the big guys around the world. Let's jump straight into it this week. What we're going to do is jump straight down under, check out down under, because that's where the market that I personally trade myself. A couple of weeks ago, actually almost a month ago now, called a short-term exit signal right about here, beginning of May. We said sell in May and go away. That's the old saying, the old market saying. And what has happened since then? The market has absolutely continued to tank. The market did find support where we said it would at 4,700. Absolutely. That was just a long-term trend line, guys, so not rocket science there. Very simple stuff. But we did not call a new uptrend. And what happened? Yes, the market has continued down. Again, it's very, very simple stuff, guys. We're definitely in a downtrend at the moment on the All Ordinaries. If you were to look at sectors that are weak for shorting, consumer discretionary is getting absolutely smashed right now. And it's quite beautiful. Financials is also starting to tank. I don't know what is going on there, but yeah, financials, at least some of the financials are definitely starting to tank on the All Ordinaries. So beautiful stuff. That's pretty much what we've got at the moment. We've still got a lot of support, guys, at 4,550, but on Friday, this single bar here, this still indicates weakness, guys, because it did close well off its highs. That indicates that sellers are still plentiful. Just a really quick note as well, guys, really quickly, something I really want to share with you is this, see this down move that we have had. There we go, back here. This is the down move that we've had. See how it's not like a short and sharp move down? It's not a down move really quickly. It's actually a systematic lower peaks and lower troughs down move. This really scares the hell out of me, quite frankly, because it means that it's not a panic selling. It's not panic selling. It's actually systematic selling for a particular reason by big money, basically. Then there's very little buyers in a move like this, and basically there's people selling their holdings as much as they possibly can. Otherwise, we'd see a really short and sharp move like we did in March, and that was our panic selling for the Japanese tsunami there. Now we've got this systematic, lower peaks, lower troughs. Very scary if you're not shorting, that is, or if you are actually long in the market. And again, it doesn't pay to be long in the market when the market is getting an exit signal way back here about a month and a half ago. So that's the All Ordinaries, guys. Beautiful stuff. Poetry. Love it. Next, we've got the Dow Jones. Dow Jones last week, we called finally our short-term exit signal. And what's happened? The market has continued to tank all week. So that's beautiful stuff. Yes, we did call it. We had been sort of giving you the setup over the last basically month and a half, but because of these long bars here, these long-tailed bars, we didn't actually call it. We did, however, call it when the time was right, when that move started to happen, and that's exactly what has happened since then. So downtrend on the Dow Jones, and again, basically, our next level of support would be back here on the March low, and that would be 11,500 basically. Around about 11,500. So that's something to watch out for. In the meantime, this is your shorting opportunity on the Dow Jones here. Now next we've got the FTSE really quickly. What we've been saying on the FTSE as well, we've had the beautiful sideways movement which we've called over the last 6 months. Not a drama there. See it bounces off the top, bounces off the bottom, had a bit of an anomaly in March, bounces off the top, bottom, top, bottom, top, bottom, top, bottom, bottom, bottom. Fantastic, too easy, sideways movement. And what we had was a lot of support here still. I said if it closes below that support, which it's just done on Friday, so hallelujah. This would be your shorting opportunity on the FTSE. You'll be looking in weak sectors, guys, and looking for the weakest stocks in those weak sectors. That is what I would do personally. You may do it differently, and good luck to you. I prefer to put the odds of probability in my favor, just personally. Now, so that's basically the FTSE, and again, next level of support, 5,600 on the FTSE. But you know what? Short-term downtrend, I wouldn't be fighting the trend, guys. I would not be fighting the trend. At least that's just me. That's just me personally. And this is what do we got next? What should we check out next? Let's look at China. China. massive, huge, phenomenal, global growth China. Ah, it's a fantastic country. It's beautiful. But however, over the last month or 2 months, we've had a beautiful downtrend. We called it way back here. Check out the previous ASX market watches. We called an uptrend. Whoa, we called an uptrend here, and that was beautiful. Not rocket science again. Check out the previous ASX market watches for the reasons why, because I'm not going to repeat them here. Very simply, uptrend, downtrend, and we also called another downtrend right here too. So loving that. In the meantime, we also did actually call support. And what's happening? Support! Man, sometimes I love this job. I really, 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 really do. But 2,700 is where the support is. And check this out, guys. I mean, check this out. It's got long tail. Buyers coming back in, closing on its highs. That indicates that we're still supported at this level. Just quietly between you and me, if it does close below 2,670, that would be another signal for another down move on the Shanghai Composite. Currently in a downtrend, and yeah, basically that's all there is to it. It's flirting with the support there, but if it breaks, get ready for another down movement. At least that's according to those particular charting rules there. Very, very simple stuff. Not rocket science in any way, shape, or form. And what have we got next? Let's check out the Nikkei. Love that Nikkei. Love Japan. I love Japan. It's fantastic. Over the last couple of months, we called a short-term exit signal 3 days before the crash. Beautiful stuff. And look, just as quickly for the reason why it was crossing that short-term uptrend, and we had a little zigzag pattern down, which means that there are sellers supporting the move there. We called it, and then the market tanked. It absolutely tanked. We also called a short-term uptrend right at the bottom of the market because of this single bar here. That's a doji signal, guys. Love the dojis. Candlestick from Japanese markets as well, which is they sort of coined the candlestick terms. I don't look at candlestick charts myself. I think they're a bit gimmicky, and you should be able to see candlestick patterns in regular bar charts if you're worth your salt. That's just between you and me, guys. What we've got here at the moment, we called a short-term downtrend right here. Now that is that has basically was 3 days before they called a recession in Japan, and again the market has continued in a sideways to down movement. Now, it hasn't really sold off like in any great magnitude yet, but at the same time, it's definitely not in an uptrend either. So, guys, we're going to find a lot of resistance at 10,000 on the Nikkei in Japan, and in the meantime, it's in a short-term downtrend as far as I'm concerned. If it was to break out of this little range here, and I'll just see this little range. There we go, there and there. Kind of like a little continuation pattern, almost. So, look, if it does solidly close above that level of 9,730, that would be an early indication of an upward trend change. But again, be very mindful of that 10,000 point resistance right there. Now, we've got the Hang Seng. Last week I said if it was to close below this level here, that would be an early indication of a short-term. Oh well, it's actually it's been at a short-term downtrend since way back here in May. And again, we had a bit of an up move, but it didn't confirm a new uptrend. So basically, it's still in that short-term downtrend on the Hong Kong index, the Hang Seng, and what we've got is support at 22,200, but basically it's really looking to break that. I don't know if it will find support there. It's currently in a downtrend, and personally, I just personally expect that downtrend to continue, but something to be mindful of is that support at 22,200. In the meantime, it's been in a sideways range for the last 8 to 10 months, so not a lot going on in the Hang Seng market in Hong Kong. Last but not least is beautiful India. Love India. Beautiful stuff. What we've got here is we called a medium-term uptrend right here, and we got a short-term up move. We got a lot of resistance here, which we called at the time. I didn't expect that resistance to be so strong, but it was. And that's where it basically found resistance, and the market has continued downwards since then. On the Bombay Stock Exchange, we've got basically it's closed below its uptrend line. Check this out. Here's that beautiful long-term uptrend line, and it's closed below that, so that does indicate that the Bombay Stock Exchange is in a short-term downtrend at the moment. And again, it has been since way back here, way back in May, early May again. So basically, the world is slowing down, guys. The world is grinding slowly to a halt. This is when the biggest moves tend to happen, when the world moves as one market. It does happen when they converge. So just be very mindful. If you're long stocks at the moment, just be very careful. Hope you're being safe. Keep your stop losses in, and don't risk too much, or risk an appropriate amount. But apart from that, guys, that is the world from a chartist point of view. That's your economy. That's finance. That's all the great stuff in the world. Looking at the charts from a chartist point of view, seeing where the world is heading and where the money is flowing, or in this case, flowing out of. Apart from that, guys, it's been fantastic to chat about the markets with you. Have a great week. Happy trending. Until next week, I will see you then. Bye for now.